Welcome back to Precision Trader University. In today's video, once again, I want to show you how to use the most powerful trading tool in the stock market, and also 3 extremely high probability strategies that will allow you to take advantage of this tool, help you to find where the market is looking to hand out free money in the stock market in advance. Okay, this is not lagging stuff that we're doing here. We're able to identify things in advance and be prepared for it. So with that in mind, let's jump right into it. Again, going back to our process, if you haven't watched previous videos, please do. Lots of good education there. And also, too, if you want to take advantage of this in live, real time with us, feel free to come check out our trading Discord. All plays are open to the public after the close for ones to be able to review and to learn from. So with that said, we took advantage of Netflix today, BABA, and BA. All right, so with that in mind, when it comes to actually finding plays, how do you go about finding plays? Well, it's very simple. You go to your stock screener function, any screener if you want to. Doesn't matter which one. You're just doing a basic search here. You're just looking for things change from the open and change from the open percent. We always want to prioritize change from the open first and foremost, because again, we're not too big of a fan of playing a lot of cheaper stuff. If there's something that's very just can't deny it, can't ignore it type of thing, then yeah, we'll jump in that. But for the most part, we like to play mid caps, big caps, and of course we use options to turn those into 10 5 10 15 $20 stocks based on the options, because again, options, a lot of people don't want to touch them with a 10-foot stick, and I agree with that. But whenever you're playing it like we play it, we're looking to take advantage of these plays for anywhere from 2 to 20 minutes, get in there, get out, make our money real quick, and then go on about our business. So we don't have any, all the theta decay issues, that plague other people with options, buying options. It's something that, that we really don't have to deal with. We will have occasions where the market just, does something crazy and just starts chopping all over the place. And we may have to sit in something, a little bit longer than that 20 minutes, maybe even up to an hour, but that's still not a crazy long time to wait to make some profit there. So with that said, pulled up the scanner, got that pulled up, clicked on change from the open here, and we notice one thing we want to notice is what is our float. We know that anything under 200 million, and especially under 100 million, we know that these stocks can be very much more volatile, and that they can get to their ATRs extremely quick. Okay, and so anyway, so it's one of those that when you're looking for the highest probability money, you ideally want to find stuff that's above 200, prioritize above 200 million first and foremost. And if you don't have those, then you can bring that down. So with that said, in the top 10, we had Netflix. And we had Boeing. So those ended up being 2 plays that we took at 2 of the ones that we took advantage of today. So with that said, we're going to start with Netflix here, have it pulled up. Now, after we have the play pulled up, next thing we want to do is we're going to come check out our ATR. Again, our ATR gives us perspective. Okay, it helps us to see what is this stock's potential. Okay, what is this potential for the day? So we're going to use a ATR. We're going to adjust it down to a 1 ATR, not the average of 14. We want to be able to see the individual days. What did it do on individual days? So, like I said, it's just the basic ATR, nothing fancy here. Just pull that up, see what it is. All right, we're going to see that our average is going to be over the last 6 or so months. We're looking at around 12, anywhere in that 10 to 12 range. So we know that this thing can absolutely do $10 to $12 from where it starts the day. So with that in mind, we got Netflix. Now we can flip over to our intraday chart. All right, and now flip over here to Bookmap. Now, knowing that, we know that Netflix starts at 298, dumps all the way down to 295 to start the morning. All right, and then it starts recovering. Now, with that said, from this point, we know from this area right here, this bottom here, the way it ended up being a bottom, we know that they can absolutely do $10. That $10 to $12 move can come from that low there, that recovery. So with that in mind, now if they just started blasting up from just straight here, 298, yeah, we'd have known that, okay, 310 is also a possibility, as well as, pretty much 305 to 310 is a real possibility based on this range that we started in right here for the morning. So again, just gives us context of what we're looking for, what the stock can potentially start doing. And also it helps us to see that if we're going to step in front of a stock, okay, stocks are like moving vehicles. All right. Now, last time I checked, you do not want to step in front of a stock or a moving vehicle that's on the interstate going from one exit to the next exit. Okay. That's not a smart thing to do. But at the same time, if you can step in front of a vehicle whenever it's coming off that ramp and coming to a stop sign or a red light, your probabilities of safely stepping in front of that vehicle become much, much higher. So what we like to do is find out, okay, one, we can play to the stop sign or the red light. That's our momentum on liquidity. The other two is the push through strategy and the short at major SML, the short at major liquidity. We know that whenever we get to those very key levels, and of course we know based on Bookmap, this is where we see all these high liquidity areas, this orange and these red levels. And again, orange and red levels based on $5 increments. So when we zoom out here to the $5 increments and we can see orange and red on these increments, now we know we're dealing with serious major liquidity. Okay, this is stuff that they are absolutely going to want to gravitate into, and when they get there, more times than not, they're going to give you some free pullback money while people are profit taking. So with that said, we have major liquidity at 300, and we also had it up at 303 to 305 there. So, and again, that's in our ATR. We know again that this thing can absolutely do 305 to 310 today. That's, but with that said, we got 300 here. Now we were looking to take, we were playing Boeing, which we'll check it out here in a second. We were playing Boeing and Baba as well. So we missed the first entry on Netflix. Okay, we wasn't able to grab Netflix at its 300 level because again, we know at a monster $100 increment, we've already blasted from 395. So we're already halfway into that ATR, a little bit 40 to 50% in, and we're at a monster $100 increment. We know that the probabilities of them wanting to pull back off of that spot and the push through spot is very, very high. Now, again, the major liquidity is 300. The push through is $1. Okay, so we're dealing with our stocks here. The push through is a $1 push through. That's a rule. Okay, that's what we're always expecting if a stock pushes through. So, for example, if it gets to 300, bam, they absorb that liquidity there like they did, and then they blast through. Okay, we're expecting, hey, they're going to pump through about $1, but they have to come back and find support on that major monster liquidity. They got to do it. Okay, the chance of them not pulling back on that is, I can't even remember the last time that I've seen it happen. I mean, that's especially with the, now if you're dealing with some low float stuff, they can get away with it a little bit more. But outside of that, when you're dealing with stuff that's in, these big stocks, anything that's in the S&P higher float, mid to large cap, you can expect it like clockwork. So with that said, we'll look over here on our chart. So with that said, Netflix pumps up to 300. And what do? They proceed to dump it straight back down into the 299, just above 299. Now, if you notice these charts on these lines on our chart, these are algo level. These are areas where institution big money trade based off of. Okay, these are absolute, because again, a lot of their trading is based on code and computer. So they have to code levels to buy and sell on. And ultimately, we found these indicators that give us extremely high probability, precise areas where we can look to get into, not only play to, but look for rejections there, and also look for areas where they push through them and they have to come back and retest them. So anyway, it just allows us to really become even more precise with our trading. So with that said, they pump up there, they dump it straight back into this algo here at 299.30. With that said, they end up pushing right back up, and now they go for the push through spot. Again, what did we say the push through spot was? Around 301. So here it is on the chart here. So they push up to 301. All right, this is our push through target. Now, with that said, we know they need to at least come back and retest on 300. Well, with that said, they dump all the way back to 300 and then some. End up dumping all the way back into the algo, even into the 298s for a little bit. Hold support on the algo. And then bam, there's some news came into the market. They just started flopping it all around like a fish out of water, all that kind of stuff. So anyway, so that was the 300. Again, wish would have been able to take advantage of that, especially for the push through, because again, the push through, when you talk about the push through strategy, again, you're identifying a major monster liquidity, ideally Preferably you want to stick with $10 increments, $100, $50, $100 increment. That's going to give you the highest probability of success. We do it on the $5 increments all the time as well. But with that said, the standard is a $1 push. So when you identify that, that $10 increment, okay, you're looking for about a $1 push, and they need to come back into that major increment there, liquidity. With that said, we did take advantage of 305 to 306. Now, with that said, the market started mindlessly pumping. So it didn't make sense. I said, something's not right. I was like, man, this reminds me of like the last hour of the day when they can come in with low resistance and just mindlessly just chop the market, chop it, bam, just push it, chop, push it. Anyway, I said, something's not right. Then it finally, I think somebody mentioned to me or something like that, or I read something. I had no idea it was the FOMC minutes today. So beautiful reminder there. Take your few minutes. Make sure there's no major news going to hit the wire today. You're getting interest rates. You're getting Fed stuff. You gotta know that, guys. So that was my fault. Yeah. So anyway, because once I understood that, I understood. Okay, all right. So this is why they're mindlessly just grinding this up into the announcement. So with that said, 305. Let's see, they push it up to 305. They give a nice dump back into 304. So right here, 305 had an algo there sitting at 304.87. Dump it right there, all the way back close to right around 304. So got a nice dollar pullback, around $1 pullback right there. So yeah, now it would have been nice if it could have got them back into the algo there, but they had already pulled back close to it once. So they had already proved that they could hold some support on it. With that in mind, they end up pushing through all the way up to, here was their push through candle here at 305.60-ish. Now, you got to keep in mind, guys, it doesn't have to be exactly $1. It doesn't have to be exactly $1. Okay, so when they start, once they pretty much hit that 50-cent mark, so it would have been in this case 305.50-ish. Once you see them do that and then they pull back like they did here, so that's exactly what they pushed up to 305.60-ish. Bam, they pull back on the major $5 increment, and they eventually pop off of it. Now, when they pop off of it, okay, when they pop off of it and they break back above this spot, okay, the top of that wick, the wick of that candle, that is momentum, okay? They're telling you, hey, we're going from the push through, because again, the push through strategy is the mother of momentum. So you need to see a push through strategy, pull back, major support, major liquidity, and bam, break above that. When you see that, push through strategy is now giving birth to the momentum strategy. And we know with that strategy, what are they looking to do? Yeah, they're looking to get to the next major level of liquidity. So with that said, they push up, they pull back on it, bam, support, showing support on that spot, and they continue to push. They end up getting it all the way to 308, up into the, let me see, no, they actually got it closer to, 308, and then so it chopped around in there, and then we finally got our FOMC announcement. Bam, got our this was actually the dump before the announcement. They dump it into the announcement just before the announcement, not too far, hour and a half before the announcement. They dump the whole market all the way, dump it back to the $5 increment, and then the market starts recovering into the actual announcement. So we can look on here on Bookmap. We see that we had liquidity start sneaking in here, 308. Now, again, I know I have it on the 50-cent increments, like I said, but ultimately, whenever you're identifying where the major liquidity is at, yes, you want to be able to see that. You want to be able to see that on the $5 increments here. All right, so with that said, we get our dump off of this 308 area. They dump it again all the way down here. Buyers start coming in here at 304. Now, again, what's interesting about this 304 area is now, because the push through strategy works on both ways, guys. So the $5 increment, the major liquidity here at 305, okay? All right, so what do? They push it through on that, only about 50-60 cents, and then what do? Bam, they suck it right back up into 305. They retest that level. They start holding support on it, bam, breakaway, and then they end up running it back up. So, what do they end up doing? We get our news. We start getting some news. Here's your FOMC stuff. And they just start flopping this thing all around. Yeah, flopping it around. Now, again, when it comes to playing FOMC stuff or news, major news events, guys, we solely rely on SPY. Okay, you got to be paying attention. We have a computer candle strategy that we use to take advantage of that. It's honestly it's the closest thing to a news hack that you can get. I mean, it's just yeah, we've been able to figure out what exactly the code is going to do during that time. And anyway, like I said, it yeah provides some very high probability money. So outside of that, we don't touch. We are flat on positions. We do not touch any. We're not want to touch anything into those news events. We wait for the announcement. We get our computer candles. We have an indicator that identifies them for us. And outside of that, we don't. Yep, we don't want to be playing with fire there. Now the one other entry that I did call out before I finished up my trading for the day was the push into the 309 to 310 area. Mentioned that would also be a very high probability pullback spot, and of course we know the push through as well, which would be 311. With that said, they ended up grinding it up, blasting it up on Netflix. Let me pull it up here, and as you can see, they push up. They had all this liquidity in this 308, 309, 310 area. And also to 311. So lots of liquidity. So they gravitational pull sucked them straight back into all this liquidity. And then once they get to all that area, okay, now again, you can take the risk to play to that liquidity. Say, oh man, look at all this liquidity up here. I think they're going to get to this spot. I'm going to put a stop here below this liquidity, and I'm going to look for them to push into all this major liquidity here. Okay, can't blame me for wanting to take advantage of that. The thing is, once it gets to those levels, you do not hold your profit. Okay. So if you're playing profit into this, you're playing some runner into, this 309, 310, 309 to 311 area, you can't hold, you just can't do it. I mean, you're fighting against the highest probability strategies in the market here. The SML and the push through strategy. I mean, they're as high probability as it gets whenever you're talking about getting a $1 to $2, dump in your favor. So again, if you like giving back a $1 to $2, you're cool with that, then hey, then yeah, ignore it. But most people don't want to give back $1 to $2. Why do that? So anyway, with that said, they end up getting it up to 310. They pull it back initially on 310. You can see it here in the liquidity as well. Get it up to 310. They pull it back. They only pulled it back about 50 or so cents. They push back up, bam, they blast through. Now what are we looking for? We're looking for the SML to turn into push through. Okay, so what did they do? They pushed it up to 311.09. Again, is that the push through? Absolutely. And the question is, did they pull back and retest on 310? They did not. Okay, now if they would have pulled back, on 310, say 310.50 here, and then they blast up to 311, then hey, then you got to realize, hey, they could keep pushing this thing. But the reality of it, they never pulled back on 310. So as they push up here to 311, okay, you get extremely bullish. Now I personally played this. I was in 32 contracts of Netflix at as it pushed up here to this push through spot on 311. Okay, again, I'd started some position down here at 310. Was wanting to take advantage of that. They didn't give me my dollar around my dollar dump around to 309. So I knew that. I'm like, you know what? The push through is now a possibility. And if they do, more than happy to double up, get my full position up there, which I did. Actually, a little bit more than that, because I knew that they had to come back and test this 310 here. I mean, that was just anyway. So I was more than happy to get that break even up to around 310.50, which is usually my sweet spot in between the SML at 310 and the push through at 311. So got it up there. They continue to dump it all the way back to the algo. Of course, I knew I got to take some off here. So I ended up taking half off. I brought it down to, what was it, 15, 16 contracts, something like that, and they popped it back up. Was tempted to grab some more back there, but I said, no, it's getting close to the last, the end of the day. And again, the only reason I was playing this up here, okay, one, I had the alert set on, and two, it was a situation where they're way above their ATR. They're above their ATR today. So 10 to 12 was their ATR. They pumped all the way from 295 all the way up to 311. Okay, I know that there is a very high probability that they need to pull this back and suck into this algo here. So with that said, as they pull back in here, taking profit into the algo, I encourage ones, hey, if you're looking at, hold some runners, stuff like that, 308, 307. I said there's an algo down here in the 307 area. Okay, if you want to hold some runner into that, that's that would be the safe / smart place to hold it into. So anyway, with that said, they pull it into this spot and they end up dumping it all the way, or pumping it all the way back up to the 309 algo. They pull it back and then blast it straight back up. So anyway, so that was just a Netflix was a beautiful example how to understand what the market is likely to do, and when it does it, how do you go about taking advantage of it. So that was Netflix. I want to give you one also too. I'd mentioned that we played some BABA. So the idea on BABA was we've been waiting for BABA to push to 100. Okay, so pull that up. All right, so this was BABA. All right, go back to the beginning of the day on BABA. Okay, so initially they dump it to start the day, they blast it back up, bam. So we're sitting here waiting at 100. Okay, now at 100 we had an algo sitting right there at 99.80, right there at 99.80. Now, what have we learned? Well, we have an algo sitting right around our SML spot or our push through spot. We don't want to ignore it. So anyway, grab some BABA. They give us a beautiful dump all the way back down to 9. So again, you're talking about some very, very high probability money there. Now, with that said, they end up pushing up. They push through here on 100. They come back, find support. Again, this is example. They did, especially for a smaller stock, 100 sub $100 stock. Guys, this is, they pushed through here. They pulled back, got their support, and they had the algo there. Bam, they blast off of it and they break above it. Okay, that's, that is the push through. Again, it's not much of one. Like I said, normally we're looking for at least 50 cents, but again, this is, we're talking about $100, or, when you're talking about 100 sub 100 and $100 a blow, you have to, you got to realize those can definitely do that 20 to 50 cent area, but outside of that, once you start getting higher than that, for me, it's 50 cents to $1. They got to push through at least 50 cents to $1 before I can validate their push through. So with that said, they get up to around 20 cents, pull it back, beautiful support, 40 cent pullback into the algo, bam, break back above it. This now transitions into your push through strategy, or from the push through into momentum. Okay, so bam, from there they just start flying through the roof on BABA. So with that said, and again, a large part of this, why this just continued to run like, is again, we had that anticipation for the FOMC. That's why, again, understanding that, hey, what's the market, what's up with the market? Okay, all right, well, they have FOMC, and it's not surprising to see them want to push into that. So with that said, that was BABA. Like I said, it gave us some really really high probability money at right there at 100. But as far as holding runners, there was no hope for the runner. Also, too, another wise thing, when you get your profit, when you start taking a profit, so anyway, you get this beautiful dump here, quick dump here, it's not a bad idea to bring that stop down. Okay, not a bad idea, because we know on this spot right here, our stop is $1.55, $1.55. So $1.55 on top of the major liquidity. Of course, major liquidity is 100, $1.55 on top of that, so 101.55. Now, the thing to keep in mind is, if they already do the push through right here, there's no point in you sitting here and waiting for this thing to get to $1.55. Once you see this happen, they pull back here and they start breaking above it. If you're still holding a runner portion or a half portion, once you see that transition from the push through into momentum, you are in dangerous waters. Okay, that is not the time to keep fighting against the stock, because it is clearly telling you, hey, I want to push up to the next major level, which in BABA's case was the next $5 increment, 104 to 105. So anyway, they end up getting all the way up to 104. And the whole market ends up pulling back. They end up pulling it all the way back into the to the 102s. So anyway, so that was BABA. The other one was BA. Let's see here. Let me pull it up on Bookmap. Played BA as well. BA for 200. Okay, that was another one. Monster $100 increment. We knew that was going to give us some very high probabilities once it got there. All righty, let's see here. So BABA, or BA rather. All right, so this was BA. Okay, so BA pumps. Now, things we want to take into consideration is where's our major algos at? Got a beautiful double algo up here. Okay, right just below 200. So got to keep that in mind, and we understand that hey, we got our push through here at 201. But at the same time, there's an algo sitting at 202.37. So if there's a situation where they get to 201 and they just blast straight from 201 to 202 without retesting 200, then I'm not taking my stop. It's just not going to happen. Okay, like I mentioned, I said this was I'm not taking. I ain't taking a stop on something. So with that said, they push to 200. Bam, blast straight up to 201. Did they retest 200? They absolutely did not. They got to 200 and then shoo, straight to 201. What does that tell me? They got to come back and retest 201 at some point. All right. So with that said, it's from 201, where they go, they dump not only back to 200, but they come back and retest the double algos. So they dump it into there, was saying, hey, got to be taking profit. Got to be taking profit. You know, if you held a runner, that's fine. But again, where's that runner? Where's that runner got to be? That runner's got to be either at your break even or just above this spot right here. Okay, just above this push through spot, because we know once they start breaking above that, that's clear signs they want to keep pushing. All right. So with that said, they come back, find support on this algo. They eventually make their way to the 202 algo. Everything, the whole market was pushing. All right. Made it to the 202 algo. I actually had held some runner. I went ahead and held some runner from this 200 to 201 entry. Had a break even somewhere here in the 260, something like that. Anyway, so I was okay with adding into this just because I knew I had the algo right there. So anyway, so it got up there, doubled that up, had a half portion now, and with a break even around 206 or 201.60s, 201.70s. Okay, and then of course from there we end up dumping all the way back to 200 or close to 201 or 250 cents to 201, right in that range right there, 270s. Anyway, we played it safe. Took I would have loved to have got it all the way back in here, but just wasn't worth it. Okay, and the whole market started chopping around like crazy, and then finally they started sucking it down, and then they had their news, FOMC in here, all this kind of stuff. So anyway, we were out of that. So as far as Bookmap, I mean, you had your monster. Like I said, you zoom it in here, look at your $5 increments over here, see where the major liquidity is at, 200. And you also had some really nice liquidity sitting at 202, the algo, 203, and 205. So that's where you knew they were very likely going to want to get it to, and then give you some nice probability pullback money in those areas. So, and another thing too you wanted to pay attention to on BA was, what was my ATR? Okay, my ATR, I know this thing can absolutely do $5 to $6 on BA. All right, $5 to $6, and look for some pullback in that area. So they ended up, they start the day around 195. So what does that tell me? 201. 201 is absolutely somewhere they can get to. And when they get there, there's a good chance they're going to be giving out some free pullback money. And of course, we know in this case, they came up here to this 201 area and dumped it $1 to $2 each time. So yeah, so like I said, you don't have to take advantage of every single tick. You just find those really, really high probability spots. You get in there, you make your quick money. Because again, when I say 2 to 20 minutes, you don't have to wait long. For example, here, when it got to 201, that was 2, 4, 6, 8. So 8 minutes for that dump. And then for here, 2, 4, 6 for another, nice almost $2 dump. Yeah, right at a $2, close to a $2 dump there, $1.50, $2. So again, when you're able to identify these spots, using your major liquidity from Bookmap, also having the ATR as your, give you perspective. Like I said, it gives you the ability to find spots where you can really, really leverage up, go a little bit bigger on the size, and then know where to have your protection at. Okay, so that, that really really boils down to it. And again, when you're looking for your take profit, like I said, your first take profit area is in that, that $1 to $2 range. So again, you get to around $1. Hey, you're looking for take it off a quarter to a half there. You get down to $2, you take off another quarter of a half. And then if you want to run carry a runner portion, a quarter of your, your initial full position, whatever your full position was, yeah, then knock yourself out for that $2 to $5 move. If you're confident in it. Again, a day like today with the market pushing, it just wasn't a good hold runner day. It just wasn't. Like I said, I apologize to the guys for just kind of being oblivious on the FOMC, because on a day like today is not a day to be sitting there trying to diamond hand runners when the market's trying to push and hold into this event. So anyway, so hope that helps y'all out. If you have any questions, feel free to let me know, and I appreciate everybody that made it to the end of the video.